Good afternoon, and thank you for joining us today. My name is Tim Lee. I'm a research analyst at Red Cloud Securities. I'm delighted to host a Red Cloud webinar on nickel exploration and development today. We will hear from John Lee, CEO of Flying Nickel Mining Corporation. During today's webinar, he will provide an overview and outlook, and then we will take questions. You can type your questions into the chat box at any time, and we will get to as many as we can. Before we kick things off, first we need to discuss the fine print. During this Flying Nickel webinar, forward-looking statements may be made. I would direct listeners to the company's forward-looking statements disclosure outlined on page 2 of their corporate presentation that can be found on the company's website, flyingnickel.com. For Red Cloud Securities, Inc., I would highlight that this webinar is for information purposes only. It should not be considered a solicitation or a recommendation to buy or sell securities. We note that this call does not consider the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. Please see our most recent research located on the Red Cloud website for specific disclosures on Flying Nickel. Before we pass the baton to John, I will start off with a few comments about nickel. Nickel has long been an important component in stainless steel, and the steel industry is obviously still the largest consumer, but nickel has a rapidly growing market for batteries used in electric vehicles. Much like many commonly used metals, much of the low-hanging fruits or high-grade near-surface deposits have been mined out. And so we're looking now to deeper deposits, or in some cases more metallurgically challenging or lower grade deposits to provide for future demand. A quality project in a politically and mining friendly area is of great value. So with that said, we have Flying Nickel presenting today. The company's flagship is its Minago project located in the Thompson Nickel Belt of friendly Manitoba. With that, I now turn it over to John to update our audience on the company.
Thank you very much, Tim, for the introduction, and thank you for those that attended today. Just a bit of background myself. I am the founder and CEO of Flying Nickel Mining Corp. We're a relatively new company traded on the Toronto Venture Stock Exchange and also on the OTCQB. I myself have over 20 years of experience in the mining industry, first 10 years as an investor. In the latter 10 years is in running my junior mining company, started out as a hobby, and all of a sudden it's 12 years later. I've raised over $150 million in the via the Toronto Stock Exchange, and my specialization is nickel. I probably have acquired more nickel projects as a junior mining CEO than any other CEO out there. And by far, bar none, I believe the Minago is the best nickel sulfide open pit project in North America that's available and controlled by a junior. And I've traveled over 35 countries and done more than 10 mergers and acquisitions. I know nickel quite well. I've done over 15 interviews in the last 2 months. And for those interested, could go to YouTube and search my name and Flying Nickel to watch some of them. So let me go over the Flying Nickel presentation, and our slogan and our brand is about metals that power the future. I'm actually in a hotel lounge transit at 4 in the morning, so I have to beg your pardon if the connection is not so good. Flying Nickel is a relatively young company. We started out actually in March this year, 8 months ago, and we raised over $8.6 million, including 2 strategic shareholders. One is a fund in Germany, and one is Blackstone Minerals, which is a ASX-listed company developing a nickel project in Vietnam. The company's shares outstanding around 62 million, and the market cap currently at around $12 million, which is about 20% of the investment that had gone into the project since the late 90s. The slide here you look at is Flying Nickel has signed a definitive agreement to acquire a vanadium project, and the rationale is to create a battery metals powerhouse with assets focusing in North America. While the nickel battery is used in electric vehicles that are mobile, vanadium is used in very large-scale utility vanadium batteries to complement the wind and the solars. Post-merger, which we expect to close at the end of January, will have Flying Nickel and Nevada Vanadium shareholders approximately own 50% of the combined company. So today is all about nickel. Let's talk about nickel. Tim had made an introduction that nickel really has become the de facto standard in high-performance electric vehicle batteries. And that's why Elon Musk succinctly said 2 years ago that the Tesla batteries are actually not lithium batteries, but nickel batteries. There are obviously some replacements in the lower performance batteries, such as iron phosphate batteries, but the nickel batteries are for the Lamborghinis, for the highest performance batteries, which has been standardized on this 811 standards. And various projection had stipulated that we could see up to 40% electrical vehicle penetration, and that would spell a double of the nickel demand going forth. And that's likely going to have to, likely scenario is that the nickel used in electric vehicles will have to be, so the stainless steel industry will have to find substitutes to overcome the high nickel prices. And you see that the nickel production, with the explosive demand in nickel going forward, nickel is actually going through a deficit. The nickel production in 2021 was 4% less than it was 2020. In addition to that, not all nickels are created equal. Approximately 65% of nickels are through laterite, and 35% of nickel through nickel sulfide. Now, the difference is that the laterite production would entail a carbon emission up to 50 to 100 times more than that of sulfide counterpart. So it would be counterintuitive for the electric vehicle to be adopting the laterite nickel, and which makes the nickel sulfide so much more enviable and desirable. And that's why you see the Australians coming on shore to acquire nickel projects here in Canada. The bottom right-hand side, I want just to briefly talk about the grades of nickel sulfides in the last 20 years. Especially on the open pit nickel sulfide mines in the world, you're seeing the open pit nickel sulfide project having a mine grade of about 0.4%. And that was half of what it was in 2005 when it was 0.8%. And the credible research from AME further projects that that grade is going to have again in about 7 years to 0.2%. And so that makes the nickel's open pit, respectable nickel sulfide mining projects so much more the enviable, and that the time is on our side. So let's talk about Minago. It's a project the company acquired in 2020 out of insolvency from another junior company that was indebted. And the project is in the Thompson Nickel Belt. That's Canada's second largest nickel camp, with the historical production of 5 billion pounds of nickel since 1959. It's only surpassed by Sudbury. There's actually more production out of Thompson than it was out of Voisey's Bay today. Minago has excellent infrastructure. The project is literally on the side of a highway, and with the 230 kV line running through the highway. I was just there in September. Minago used to be an average grade open pit nickel sulfide project, but now it's a premium and top tier nickel sulfide open pit project in Canada. You see that our grades at 0.74 is almost 3 times higher than our peers in the nickel sulfide junior space in North America. In terms of resource, Minago is one of the very few nickel sulfide projects that boasts over 1 billion pounds of nickel resource. Of that, around approximately 2/3 of that is in the measured and indicated category, and about 1/3 of that is inferred category, both grading at 0.74%. The 1 billion pounds of nickel is split between the Nose deposit and the Northland deposit. The Nose deposit account for approximately 84% of the resource, and the Northland deposit account for 16% of the resource. And the resource, a majority of that resource of both deposits are open pit optimized. We have just concluded FLYN Nickel, the first round maiden exploration drilling this year, and we announced the results back in September, October, and November. We drilled on both the North Limb and on the Nose deposit. the north limb is mostly exploration drill holes, and we were able to successfully delineate some resource near surface and at depth, which were previously overlooked as the previous operator was focusing on the nose deposits. And you're seeing some very great intercept near surface of 30 meters at 0.8% nickel and 0.5% PGM. And at depth, you're looking at close to 100 meters. Let me see. At depth, you're seeing intercepts of for North Limb of over 100 meters, 0.4% nickel and about 0.4% PG, 0.5 grams of PGM. And on the nose deposit, we drill a couple of holes for metallurgical testing and also infill drilling. And of that, we're able to intercept 100 meters and 60 meters of, again, very respectable grade of nearly 1% nickel and 0.5% PGM. What really, really surprised us on the good side is the consistent occurrence of PGM with a very close correlation to the nickel grades. That is something that was not documented well by the previous operator, which didn't even bother to publish a PGM resource. And that will be one of our priority going forward, is to establish a PGM resource. And we kind of figured out why in the last 6 months, as only about half of the drill holes from historical drilling had assay for PGM, as majority, half of the drilling occurred prior to year 2000. And that is the reason. So our team is looking to study how we can fast track to publish a PGM resource, even on an infer basis, and to share with the investment community, because it is a very significant PGM resource. Looking at the grades that we have here, that could potentially add up to 25% of the economics, the bottom line to the project's economics. Looking out, the company Flying Nickel controls 197 square kilometers of highly prospective exploration grounds, and that is the shaded in the blue area. And you see the little bit of a smile. That is the fold where majority of where the likely mineralization of nickel occurs. I would say 95% of the prior drilling all happened in the black square on the right-hand side, and you see the nose deposit, which is the bottom of the within enclosed in the black square rectangle. However, there are several very highly prospective mega anomalies that yet to be drilled, so that will also be one of the priorities of the company going forward. Minago boasts one of the highest nickel concentrate in the world. Used to be 20% is the norm, but now people are struggling to find concentrates over 10%. Minago's concentrate can get up to 35% depending on the recovery. There's extensive metallurgical feasibility standard metallurgical studies being done in the last 15 years. With the head grade of 0.5% nickel, which is about half of what the resource grade is, what we have today. The Minago was able to achieve up to 20% of 20% nickel concentrate and a recovery around 58 to 52%. So obviously, if we were to do, and we intend to conduct metallurgical testing on the 0.74 representative samples in our resource estimate, and we do expect quite a bit higher recovery going forth with the higher nickel grade. This nickel concentrate is very similar to the nickel concentrate coming out of Thompson today, which is still being mined and processed by Vale. And that concentrate is going to Sudbury, Vale's Sudbury for smelting, literally, driving through the highway of where Minago is next to. So we feel very confident that our concentrate, our Minago concentrate, is compatible with all the major smelters around the world. And on the right-hand side, Minago, we actually engaged a company called Skarn, who specializes in studying of carbon emissions of mining projects around the world. We published a study about 2 months ago that features Minago as probably the top 1% in lowest carbon emission. Minago has up to 99% less carbon emission to our Indonesian counterparts, and we're actually 5 times greener. Then we're 2 times greener than the mines in Raglan. We're about 3 times greener than the ones in Voisey's Bay, and we're about 1.5 times greener than the mines in Ontario, because Manitoba is 99% hydro powered. And because of the gentle topography nature of Minago, in addition, we are also looking at a potentially autonomous and autonomous driving electric mine fleet, which will further lower diesel consumption and make this project potentially one of the greenest, if not the greenest, nickel sulfide mining project in the world. Briefly go over the timeline. As I said, never what I've imagined in my 20 years in the mining industry, and a lot of crazy things has happened to see Minago trading at around $12 million market cap, whereas Minago had received over $50 million, actually over $70 million of investment in the past. The project was discovered in 1966. It's gone through several iterations of ownership. The project extensively drilled and had a feasibility study in 2011, which Flying Nickel is in the process of completing an updated feasibility. And that is to be released, I would say, within the next 60 days. From there, as a matter of looking at the nickel price and the window of opportunity to do a project financing and put the project on the map and commission to production, potentially by 2027. And this will make the Minago one of the earliest entry to supplying nickel as a greenfield mining project in North America. So that's highly sought after. The company is in discussion with more than 5 strategic nickel consumers, from battery manufacturers to auto manufacturers all around the world. And they were actually not deterred of our timeline. Actually, quite encouraged, given that we're actually a lot more advanced than the other nickel peers that they're looking at. The company has a budget about $7.5 million for 2023. We have set out, actually onset of 2022, the objective of completing a feasibility study, complete a round of drilling, and complete the environmental ag license, which is the final permit required to put the mine into production. So I think we're on track to deliver all three. Probably, on track. We deliver the drill results, and we're sort of on the final. In the sort of the final stretch of completing the feasibilities, as well as the environmental ag license, which the government is in receipt of our application, and they're in the final adjudication phase. Going forward, 2023, we've set out a budget around $7.5 million. However, majority of that is optional. We don't have any commitment to. We don't have any commitment in payments. The project is owned 100%, and it's a matter of completing some of the preliminary engineering work beyond the feasibility study and continue to engage the off-takers and strategic investors to put together a financing package in order to put the mine into production. I want to briefly talk over the management team. I'm the founder and CEO of the company, and we hand selected and recruited Rob Van Drunen, who started his career in Vale in Thompson and recently retired as one of the senior managers in Vale. He's based in Thompson, and Minago is his backyard, and he came out of retirement to join us as a chief operating officer and has been with us for over a year. Very hands-on, very budget conscious, and he's an excellent fit for the company. Also, Mark Scott, who's in our board of director, and Mark was the head of Vale Thompson, and he was the chairman of the Manitoba Mining Association. Recently came out of went into retired from the nickel scene, and he's now in the junior mining space. We have Ross Smith, which is one of the expert geologists, again focusing Thompson. Doug Ramsey, who specializes in permitting and First Nations relations, with over 40 years experience in this area, and of that 20 years specifically in Manitoba, actually represented the First Nations and the government of Manitoba. We have Ron Espel, which is another permitting and social community relations guru, and Ron is actually specialized and running the project in the Vanadium project in Nevada. And that's all. Flying Nickel is all about metals that power the future. We have a great management team that's well experienced that can take the project to the next level. And this is one of the very few projects we believe that can supply nickel by 2027. And the project is one of the highest grade that's open pitable nickel sulfide in North America that's highly sought after. With that, I'd like to hand the control back to Tim. Thank you for your time.
Great. Thank you very much, John, for the informative presentation. We'll now start the Q&A portion of the webinar. Reminder to everyone on the line that you can type your questions into the chat box at any time. We already do have a few questions. First, looking at the personnel side, how are you finding recruitment? Are you finding candidates are interested in nickel as opposed to gold?
Tim, the answer is we do have a lot of very qualified people looking to join us. I think it's a function of partly the employment market has really cooled down versus say 18 months ago, where we struggled to find people. And secondly, also speaks to the merit of the project. We do have people that are unsolicited in geologists and engineers, and also potentially CEO materials that have raised a lot of money looking to join us. And another thing is, Tim, there's been a lot of layoff from By Valley and Glencore in the nickel space in the last 10, 20 years. And there's a lot of retrenchment because nickel has been in doldrum in the last 10 years. So with the recent pop, the nickel price from 10 to almost $50 a pound in a flash in March, so the rejuvenated, rekindled a lot of the ex-veterans of the nickel people back onto the nickel scene. So while we're a little bit discouraged by the nickel price, given sort of the buzz in the electric vehicle space, but you know what, Tim, this is not different from say lithium 4 or 5 years ago. Canada is always late to the renewable or battery metal space because Canada is so blessed and well endowed with hydro and with oil and gas. However, I think the macro and global thing is very, very clear. The future of electric vehicle is here to stay. Nickel is the standardized highest performance EV batteries, at least for the next 10 years to come. And we're seeing a lot of these strategic investors and consumers and end users in battery in auto space that's coming to us looking for feed 5 to 10 years from now. So I don't think there's any question on the commitment that they have in nickel, maybe not on an exclusive basis, but definitely has that footprint and has that space nickel occupied in their supply chain, at least for the next decade. Tim?
Okay, great. Kind of reviewing a bit, but looking back to the beginning of the year, obviously you had some objectives on the permitting front as well as drilling and so on. Can you kind of give us a summary of progress over the course of the year on some of those goals?
Tim, I touched briefly on during the presentation. So we raised $8.6 million in January of this year as part of this IPO process, of which Red Cloud took the lead on it. We appreciate that. There are 3 major pillars and objectives we're looking to achieve, and we set out on the onset of the year. So first is the drilling. So as I said, we completed the maiden drill program. The drill results were on target. In fact, exceeded our expectations. I mean, on the nose part of the deposit, we're getting 1%, whereas our resource was 0.74%. And we're able to successfully sort of prove up the North Limb deposit to extend to near surface and as well as at depth. So that's a very exciting development, given that North Limb is only about 16% of the current global resource. And we were really very pleasantly surprised of how much PGM that we have at Minago. And that's not something of a, that's not like it just came out of a blue, but because of, as I said, all the drilling before year 2000 did not have that PGM assay. That's why it didn't come out in the resource estimate. But this PGM really is going to crank up the economics, we believe, as we delve into the future. And that set the Minago project further apart in terms of the resource and the grade. So that's the first part of the exploration. We're very, very pleased with what we've seen this year. It's exceeded our expectation in both the nickel grades, in the occurrence of mineralization in the North Limb, and also the PGM presence. And the second part of what we set out to do is to complete a feasibility study. So there was a historical feasibility back in 2011. And we're looking to update that so that investors and our potential strategic investors can and strategic cornerstone investors can have a very clear view as to the economics of the project. It is a feasibility level project with lycopodium, with Mercator, with tracks. So it's taking a little bit of time to making sure that everybody come together with all the chapters, and then we want to publish the study one time, and then making sure that all the dots and checks on the boxes are checked. So we set out by the end of the November, maybe a slight up to 2 months delay. But there's nothing adverse or material adverse that we're dealing with. It's just a matter of compiling all the data sets available is coming to us and making sure that's coming in one place. And the third but not least, and also with this feasibility study, because of the upsize the price on the PGM, we have to sort of work with the SGS to put together some circuits to test the PGE to make sure that there's decent recovery. So I think that would be a good thing to be included in the feasibility studies, given it can carry a big significance in the project going forward. So that's why it's taking a little bit of delay as we're waiting for the PGE recovery assay results to be incorporated in the feasibility study. So that's something a little bit unforeseen, but that's a positive surprise. So the second, so it's the exploration, the feasibility study, and third is the environmental ag license. The company submitted the environmental ag license. I was actually in good standing. We were quite surprised when we acquired the project. Was not known to us. It was not made known to us, and it's a bit of a mess when we acquired the project, given the last company was in the stage of insolvency. So we found out the environmental ag license was actually in good standing, pending the approval of notice of alteration, and that is a redesignation of the tailings area. And we have 197 square kilometers, a piece of very flat land, so we didn't have any problem choosing the location. So we did all the tech engineering studies late last year, and we submitted the application in February of this year with the Manitoba government. And we've received a couple of rounds of comments, and now they have received everything that they've asked for. And we've received some very encouraging and positive comments from the government of Manitoba. We do expect a final adjudication to complete and the decision to be rendered and the ag license to be issued in FLYN Nickel's name, I would say, in Q1 of 2023. We're very optimistic. However, there's timelines we set out, and that comes with the appropriate forward-looking statements and disclaimers, and some of the things just beyond our control. But I do want to preface and say that we actually have a very good experience in working with government Manitoba. They're very proactive in evaluating our proposal because it's thousands of pages. And in addition, we're also very grateful of the collaboration and cooperation of the First Nations. I met with the chief just 2 months ago. They're very entrepreneurial, and they're looking for employment, and they've been waiting for Flying Nickel to come along to reactivate this project, which has been discovered over 30 years ago. So, we're very grateful, and we cherish our relationship with the First Nations and with Manitoba. We couldn't really ask for any better partner with the government and also with the local community, Tim.
Great. And then we did have one question, and you alluded to it, obviously, with the feasibility study, but we did have one question on what is the next stage, or what are next steps here as the project moves forward?
Well, Tim, if I'd have come to you in January of this year, say we're a junior company and with a $8 million, $7.5 million budget, 8.6 minus your commission, that we could achieve a feasibility study. We can bring the project to shovel ready, meaning that we have all the requisite permits to start the construction. So we have a feasibility study, we have the permit, and then we also could do a round of exploration drillings of which we made discoveries of PGM. You would have said, John, get the hell out of here, right? All for $7 million. Yeah, here we are. We are literally at 100 meter raise. We're at the 95 meter stage. Albeit there's a slight delay in delivering our feasibility study and the environmental ag license, we're really very confident of delivering both in Q1 of 2023. And after that, it's really, we're going to let the mating season begin. We have put a lot of emphasis in our data room as we inherited over 1 terabyte of data. So that data room is, we believe, world-class, and there are over 5 companies in our data room right now plowing through the data. And once the feasibility study is published and once the permit has been granted, that's really going to put this project in a very, very unique position. I don't believe there's anybody else that's close to where we are besides maybe Nora Ring of Fire, but that's been acquired by Wailu already. And that project requires billions of dollars in infrastructure, whereas this project, the 2011 feasibility studies, the cutbacks is around $600 million. I believe we're going to come pretty close to that because we had cut out some cutbacks such as rail transport, which we don't need. So I think this is one of the very few projects of very high grade nickel compared to today's standards with PGE byproduct credit, and in a jurisdiction that's very mining friendly and very cooperative. And then the project could be shovel ready by the meaning that we have the requisite permit to start construction by not even by the end of next year. I mean, I'm talking in the first half next year. Tim?
Great. Then we have a question here on kind of overall strategy. So looking at ultimately the strategy for the company, do you want to become a mining company, or would you look to advance the project and potentially be bought out by a producer?
I think we're keeping, Tim, the short answer to your question is we're keeping our options open. And as I mentioned, my experience in the first 5-6 years of my running a junior company, our experience is being exclusively in exploration. However, if you look at the management that we brought on, I mean, these are people that have commissioned multiple mines and with extended experience in Valley-Thompson. And so we've brought on the talent, in engineering talent, in construction talent, in management talent, in community relationship talent. So we are sort of changing our bloodline, our breed from exploration and flipping projects to actually getting serious about putting a mine into production. And that will be dictated really based on the market conditions, because there's always risk associated with the putting a mine into production. So depending on the ability for us to raise money without excessive dilution. And that also depends on the nickel price. And I think what we'd like to do is continue to de-risk and develop the project. And we like to sort of buy project 20% from the bottom in terms of the nickel price, and then sell the project or exit the project 20% from the top. So right now, Tim, I'm not too worried about looking for suitor right now, because I believe that where nickel price is probably 20% from the bottom, then 20% from the top. And technically, nickel just broke out of that wedge between $5 to $10 nickel per pound of nickel. That's been set there for the last 15 years. And Tim, you saw what happened when that band got broken out, and the nickel went from $10 to $50, and now it's resting on 12. So I think it's a classic technical chart of a major decade-long breakout, and it's now resting on used to be resistance, now it's a major support. And so we're just going to continue to hammer away. We're going to invite as many people, put ourselves on the map in the battery space, in the EV space. And in fact, I said, I think that there's probably, Tim, as you know, less than 10 bona fide nickel sulfide projects in North America, and it's not going to take too much time or research for people to find us out, and they're doing that already. So it's all about broaden our awareness, broaden our reach, and then let's see if we're around a couple of years from now, Tim.
Great. And then here a specific question on drilling plans. Is further drilling planned for the North Limb to further incorporate more of it into the resource?
Right. North Limb account for, I think it was 16 or 14% of the resource. It's very sparely drilled. I think there's maybe only 10 drill holes. Tim, we're a little bit dilemma because our market cap, we're such undervalued company. We don't really want to spend a lot of money in drilling because, it's going to add. I mean, if we spend half our market cap in drilling and only develop 10% additional resource, that would be counterintuitive. So given what we saw on the assays that we received, I would say, Tim, the highest priority right now in terms of exploration is looking at how can we delineate, how can we publish a PGM resource, even on an infer basis. because all the economics so far in FS, in PEA, had not incorporated any of the platinum, palladium, and precious metals byproduct credit. So we do have about a third or up to half of drill holes that has some PGM assays that they're not complete. So the team is actually working quite hard in engaging Peter Lightfoot, which is the well-known guru in the nickel PGM space, and working with Mercator and looking at all the historical data and looking at core check on how much work required to put together that PGM resource. So it might require a couple of few infill drill program. So that's probably our #1 priority. And Northland is a very exciting development. We were able to find nickel mineralization merely less than 100 meters from surface. And whereas Minago, really that mineralization starts from around 200 meters from surface. So it appears that Northland has shallower nickel pockets of which we can exploit. So that is another area that is quite interesting. But we gotta look at our model a bit to see the consistency and where we can drill to get the best bang for the buck to develop most resource with the least amount of drilling. And then third but not least, Tim, you saw the exploration of the mag anomalies. I mean, it is a 200 square kilometer area, and that has a lot of the signatures and characteristics of what the nose looks like, and none of them is being ever drilled. So, we love to have, if we have a budget, we love to do a bit of more regional exploration drilling, because we believe that there's a lot of prospective targets that could resemble another nose or two or three. We don't know. But that has to be balanced, right, against the work that we're doing with engaging with strategic and with the permitting and with the First Nations relations. So I would just say that I think this is a project team that's very proficient in exploration in all these areas, and we just got to pick our spots carefully to minimize the dilution of our shareholders. So I don't have a clear answer. I think PGE is the top priority, and we would love to expand the Northland resource a bit, and as well as some of the regional exploration.
Okay, great. And kind of following up, you had spoken about it, but following up on the PGEs, were historical samples, drilling samples, not assayed for it, or are there things you can go back and obviously you're assessing it, but are there old samples that could be reassayed for the PGEs?
Right. The drilling before year 2000 were not assayed for PGE. So so I would say around 35% of the drilling were assayed for PGE, and this is by Victor Nickel, which is the project's previous operator. So I think first of all we're looking at, so those assets are good, and we're looking at if we can make up a resource based on that alone. If not, then we do have people there at the core shell looking at retrieving some of the cores, because you're looking at cores over 20 years old, right? Some could be oxidized, and the recoveries and the assay grades might not be the same as it was when it freshly come out of the ground. So that is something that is priority for us. We're modeling the project right now, looking at all those different data points, and to come out with the plan, to come out with the resource.
Great.
Which could Intel assaying some of the historical drill cores before 2000, and why not? I mean, they're low hanging fruits, right? They're there.
Okay, great. I guess one final question. Obviously, one feature of the project is the deposits under some sedimentary layers, and in the past there was looking at a sand layer for frac sand, and but I know that you have obviously a new plan with some of those rocks. Can you tell us a little more and kind of an update on the plans for that?
Certainly. Well, Tim, the feasibility study, the company and our team come to conservative feasibility study, and to clearly demonstrate what the threshold of the nickel price to put the mine to make the project economic. So we don't want to overly complicate and convolute byproducts of frac sands or of limestones, of which the battery guys and the auto guys don't really care about. And so I think we really want, we want to establish a break-even nickel price that's very, very conservative. So everybody knows what does it take to put the mine into production, what nickel price. Secondly, however, that doesn't mean that we don't have a plan for these byproduct credit, because when you dig them out of the ground, the carry cost is zero. So there are two very valuable byproduct. One is frac sands. And frac sands are used for fracking of oil and gas. And the previous operators determined there's a market for it, but the price fluctuates, and the product is very custom and specific to each oil and gas project. So we do have a frac sand resource of which we are that will be in the study, but that would not be part of the overall economics. So if we're able to realize cash flow, that's great. But if not, we have that established baseline, so everybody's expectation is clear. What comes to this pricing, though, Tim, is that we also have a lot of granite and limestone. So those are good for construction. And when we had engaged with the Norway House, which is the First Nations in the area, and Norway House is one of the top 10 First Nations in Canada. I think their population is close to 10,000. They already have done a lot of the construction projects in northern Manitoba for the government. And also there is a lot of we also have talked to Manitoba Hydro. That had a lot of the water dam project for electric power generation that require granite. So potentially it could be a very significant revenue streams from limestone required for road construction, granite for the some of the dam constructions for Manitoba Hydro, and the frac sands, which is actually probably the third least attractive byproduct, as it has to be hauled out some distance away to other parts of the in Minnesota, in south of the border, or to Alberta to realize that frac sand revenue from the oil and gas industry. So I think I'll just keep it. These are sort of surprises in the fold, but all in all, I would just say that you would look for a feasibility study with a very conservative break-even nickel price, strictly based on the product of nickel, and the subsequently after soon probably having incorporated the PGM element to that.
Okay, great. Well, I think that's all the questions we have today, John. I'd like to thank you again for presenting today. And thanks everyone out there for tuning in. Just a reminder, Red Cloud Securities will be back tomorrow, Tuesday, November 22nd, when our webinar series continues as we present Abcourt Mines at 2 p.m. Eastern Time. Have a great rest of your day.